Hey, what's up, guys? Sorry that we couldn't do the live stream today, but I at least wanted to do at least a decent video on some longer term outlook on a few stocks that I know that a lot of us are looking at. And I was just going to start with SPY. I'll even make a few notes. So here, I'm going to go to the daily. But I was noticing here on the daily, all I did was put on the 50 SMA and the 200 SMA, two of the most popular. And then all I left on was MACD and ATR. But I was noticing the ATR was kind of running out of gas here, while momentum's slowing up here on the daily, while also catching support. So we kind of have like some small divergence there, considering if we're going to be catching support for a bigger move, you're going to want this to be up here. You know, you're going to want this to be up so your tank is full, so it has a lot of movement out of that support catch. So I don't know, that could be a trap. It could be a bearish divergence there. Just a small note I was looking at earlier. Let's go back up to the weekly. So I do think a retest is due, downwards that is, but the farther you go out, the more seller momentum is weakening. So it's, I don't know, it's kind of weird on bigger time frames when you look at SPY there on just the daily and weekly, because you look at just these indicators and you're thinking, well, I think we retest down, but there is a lot of upside. That bill getting passed, all this other stuff, that's gonna keep a lot of buyers incoming. Plus, the Fed is still a problem with buying. Not as bad as when we were here, but they're still buying. But that's all the indicators I was just using, just because these are good long-term pictures, indicators in my opinion. Draw some trend lines. I don't know. I thought I don't know. I don't know what to say because I feel like we should be bearish, but I don't know, we'll just keep support grabbing on a lot of stuff here on the 4 hour. Yeah, we're squeezing a lot on the 4 hour. Just between those two indicators. But I do like that the uptrend isn't as crazy now. So we might have some more easier calculated movements. Oh, here, I guess I could do a Fibonacci. $339.38. And then what was that one? $217.75. Okay, I got that. All I did was high to low, left to right. Even in Fibonacci, it's squeezing. It's between the medium range. Definitely watch these two levels here on SPY. I like that this Fibonacci line ends up right where that 200 SMA is, the stronger SMA. This kind of happens to be right of the top side of this range here. So definitely good use of Fibonacci there on the 4 hour on SPY. Let's go check out BA. I really like trading BA. That's why you'll always see me go check it out. Let's clear everything we have. I did notice for a while that even if you just do from the wicks, BA is squeezing very hard. Even if you just go from the gap here, because you got your small gap right here. There's a gap here, and then you have a gap from there to here pretty much on both sides, both from here and here. So I really like those ranges there. Let's check out the 4 hour. Yeah, it's just squeezing very hard. BA is ready to make a bigger move up or down. You never know with this one. Volatility's on the floor though. Maybe play small rejection plays or just be patient and wait for the bigger move. Might even be able to play a strangle on this of some sort. Get a call and a put, both out of the money. Decent expiration, nothing too crazy because you can see it's about to fall out of the squeeze no matter what. Play it like that. Or you could just wait and double confirm because it's gonna, I guess we could do another Fibonacci on here. I never show everybody how much Fibonacci I've used before, but I don't use it a whole lot anymore. I'm going to make a video on this today, actually, just because I had a few requests. 391 to 89. All I did was go from high to low of the time frame that I'm on. The different time frame, there's going to be different highs and lows, as you can see. See? So if I was to do it from the weekly as well, see, my lows are going to match up, because that's the all-time low of this time frame. Go back to the daily. Yeah, you have a shit ton of lines, but go down some time frames. Look at current price. You're not looking at all these lines here. You can see that besides the lines that we drew, which those were just gap range lines, so those are also very resilient lines, very crucial lines. You can see it's between the squeeze of that one gap range. You can see that 89 is very strong because you have two different Fibonacci retracements lining up, both from the weekly and the 4 hour. You saw me do both. That makes that line even that much stronger. So you know damn well if you see it hit 89, you're going to play calls on the rise up, or you're going to play some very quick scalp on puts when you're playing new lows, because especially on BA, you don't want to be caught in that. You don't want to be caught trying to catch the knife. You want to wait for a true confirmation. But I think BA goes up from here. If it does retrace this 89, for sure. That's a strong bounce. Let's back that up. Yeah. 1, 2, 3, 4. 4 very strong candles on the 4 hour. Go down over here. We have one more touch on that next gap level that we have. And it hasn't hit 89 again. So I think we're going to squeeze between these two lines you see right here. The purple line, kind of squeezing. That bottom line you saw me draw. And then that middle gap range line that you saw me draw. It's going to squeeze between here, and I think we're going to pop. But kind of depends on how the market does next week. I think we're green just because of all the stuff that's going on with the bills being passed and all that stuff, just fundamental stuff. I'll also try to make a small notepad of all the fundamentals of the economic stuff going on this week, like the economy reports and all that. Even if it's just a bunch of big reading, it doesn't matter. It is good reading, because then in the future you can say, oh, I know how to read that, you know, this and that, and that's good. I'm just going to draw my trend lines here, or my gap range lines like we always do. That and that. So we got our two most important lines on Beyond. Beyond looked like she's coming down to catch support on that 130 some more. I did say this was the first time it's ever done this, so it is going to be a little weird seeing this at first. Watching this, though, is very important. It's never done this. It's never gone above. Besides when it created the gap, it's never gone and retaken above. Never once. And here we are. So now I'm looking over here. So I see that we have, you know, besides this candle, we have a gap range between that candle and this candle. That's to about 155. So I know that we have a strong range there. I like this line because it has a bunch of touches here. Has some resistance here before the bigger move up. Some resistance here before the bigger move down. Same as here. So I'm going to go on over to over here. See current price. And just from the daily chart, I have two more lines above here that I didn't have before. Just adding more information. The more information you get, the better. No, none of this is 100% accurate. It nothing really ever is, but it's still good to get a feel for where you are in the dark. Because we didn't know those levels above beforehand. I mean, I know that I have a level here, you know, because you see that. Whoops. I have a line there because you see both this wick and this candle body pretty much touch right there. So you know that 141 is a damn good level. Let's go to 4 hour. I mean, even on this time frame, we're squeezing so hard. This thing's ready to go too. Now, and you never hear me say, "Oh, it's going up or it's going down," because I really don't like being biased on patterns. Yes, rising wedges a lot of the time fall, falling wedges a lot of the time rise, descending trials are bearish, you know, ascending trials are bullish, but that doesn't always mean that. I have the double confirmation video on my YouTube. I recommend you go watching it if you haven't already, but it shows you how to better confirm bigger squeezes like that, because yes, patterns are biased or to a certain percentage of the time, but it's still good to double confirm how I talk in that video. So I really like Beyond. Like always, of course, I'm a little biased on Beyond because I really like trading it, but I think it's squeezing just as hard as BA is, and you saw how hard BA was squeezing. It's going to continue squeezing. I mean, it could even do it, one more day here, I think, before making a bigger decision. Are we going to retake above, or are we going to kind of, just sideways trade for a little while, make a new range? Because it is a pretty wide range between here and there. It really could just go up into this zone and then stay between here for a while if it wanted to. McDonald's, haven't looked at McDonald's in a minute. Let's clear all of our lines there. Oh, also, I have been getting more shares of the lists I've posted. KO, Waste Management, PSA, and ET. Those are the 4 stocks that I have been purchasing throughout most of the drop, most of the rise. And if you should set a goal, like by the end of summer, I want to have blank amount. By the end of the year, I want to have 50K in shares, 20K, 10K, even if it's just 1K. You want to put a certain amount of money back into shares for the true long haul. Those are the 4 stocks that I'm going in. ET is probably the only one I'll sell within 5 years, but the other 3, WM, PSA, and KO, I'll be holding for a very long time, as long as I can. I was a little off topic for the stream, but I did want to give my little tip there because I know there's some new members and our chat's growing big now, so not a lot of people know what all stocks we've shared. So I just wanted to reshare that one, retouch on that one. So here on the price level, on the daily using the price level tool, I see a very strong line, support grab there, and then that was the last stop before it gapped down. That is a level that we're going to have to retake, as well as some trouble over here. That's a level we're going to have to retake for McDonald's to truly be back on track to catch support to be bullish again, in my opinion. I do think a small pickup is due here, just because McDonald's seems a little oversold compared to the rest of the market. I don't think McDonald's is... Yes, they have less consumers, but... I don't know, we'll see here. This is going to be a weird one for some stocks like McDonald's, because you don't know, like, is this hurting them? Like, you never truly know how much cash are they holding, because even if Apple's stores are closed, like, Apple has so much cash, it doesn't matter. They could be closed for another month, they'd probably still be okay. Which other companies, that would hurt them so much. The cash amount definitely helps. Short-term wise, you see how I'm drawing all these lines, and like the trends have kind of like leveled off now. Like we had our V recovery, not really a true V recovery, but now we're kind of like continuating, kind of just sitting sideways in between ranges now. I'm seeing a lot of this on a lot of charts, except Amazon. You won't see that on Amazon. Amazon is literally a V recovery. But that's my 2 cents on McDonald's long term. It's gonna need to break that purple line to turn back into more of a downtrend, in my opinion, to break the trend. But let's see here. I could just as well bounce here, and you could continue to trade this range too. Just got to be play light, play light. And especially in times like now, it's very annoying to swing, because even when you're right, sometimes the IV comes down and hurts you, or whatever contract you're in is super juiced. Just a bunch of crazy things. There's a lot of variables and options, and that's why we have all those guides in chat. If you haven't checked out the guides, books, or my guides in chat, please go check them out. We explain a lot of things. I'm just now starting to do more video content to help add to it, but there is a lot of written down content in this chat. There's a lot. And us adding more video content is just helping out more and more. Tesla still in that squeeze. I think I've drawn this the past week. This was a tighter squeeze beforehand, but I like the extra movement it had here. Alright, we can go to Amazon. Yeah, see, like a literal V shape. More of a check than anything. The fact they hit 24.75 is impressive. Just from looking at this price history, though, because this is pretty much all the information you have, I really do like this spot because you have a lot of points of interest. You got your touch there. You got your touch there. You got a few touches there with a doji and a hammer. You got a big candle up there. You got the one high of the daily chart sitting on top of that line. Then you have more points of interest sitting here, including current price almost. So I would definitely say 24.17.35, or just 24.17 to 24.18 range is definitely a good range to watch for break above or for a big rejection down. It's kind of forming a little V here. Maybe just catching support to make a bigger move up. You never know. Amazon is prospering from all this. They might have a bunch of slowdown issues and a lot of problems with the COVID, but they're definitely killing it compared to a lot of companies that are getting hit by this. Another good one's Netflix. Netflix is doing amazing from all this. Looks just like the Amazon chart. Almost a straight up trend. I don't know. You don't even have to do that. That was just me just getting a feel for it. I'm not really. It's not really a technique or anything. It's just getting a good vibe of where the trends are and what angles they're at is a good idea to look at. I just look at all as from like a line perspective. So the old high it broke, which was right here. The top of that wick is at 449.50 pretty much. We'll just say 450. It's kind of hard to analyze that when it's at a high. You'd think a small correction is due, but it's Netflix. They're not hurting too bad from anything right now. This could continue to push up for all you know. The fact that it's above that 450 is kind of crazy because 450 as a psychological whole number would make a lot of investors think buy, 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 buy. Now, technical wise, you're thinking rejection because it's at a new high. I mean, that's just perfect spot to just come down, but that is a bullish candle on the weekly. Let's go to the daily. Yeah, bullish candle. So I'm more bullish than anything on Netflix. Like still, I've been saying this for weeks. I'm still very bullish on this. Momentum's picking right back up as it's still up here. I mean, you have one good day on this thing could see 500 in no time. One more good day, I think, gives it the momentum. Getting support on top of this will give it more reassurance for technical traders. We can go check out the shared buyback ranges, I guess. Coca-Cola, you could pretty much buy it almost any time. I'm gonna be honest. If you're not scared and you're willing to be in a stock for a long time, Coca-Cola is one you shouldn't be scared of. ET, I have a bunch of ranges here. These were 450 was my old average since I added pretty much double my position, and the low range that I said I was gonna buy in. These were the only two ranges I was gonna rebuy in, because this is CEO buyback spot, is the $5 spot between 5 and 6. So pretty much anywhere between 5 to here is a very solid spot to buy ET in my opinion. I do see this thing returning to 14 in no time. Give it a little bit of time after this COVID. The energy sector is what it follows, so be careful of that. But this thing has amazing upside potential because they aren't just an energy stock. They have their hands in so many productive fields. The other ones were waste management. Waste management is another one that I've just been steadily buying in that like 89 spot. That's where I initially bought at, and then I kind of like let the stock market rise, and then I started seeing, when I saw that gap up, I marked this, and I started buying at like the low 90s as much as I can. So anything under 100 is pretty much what I'm basing a good buy spot for long-term wise on this stock, in my opinion. I'm no financial advisor or anything, but this is just what I've been looking at. PSA is another one that I'm pretty much just saying is a good spot in general because of how cheap it is right now. I mean, let's go to the weekly chart. PSA is Public Storage. They're a REIT. I really like them long-term wise because they're a very strong stock and they're going to be needed for a very long time. So let's mark all the last time she's been here. I mean, this is a resilient spot. I'm on the 20-year. All I added was 20 years, and I'm still on the daily chart. So every candle still represents a day, but it's over the last 20 years. So Public Storage there is the 170s. But I like the resiliency on this long-term chart. You could see that this was a big resistance turn support before bigger moves were made from it every single time. So pretty much anything in the 170s and below is a solid spot to buy this stock. Again, these are stocks I'm holding for 10 to 20 years at least. ET is the only one I would think about selling within the next 5 to 10. And that's just my take on the four that I was looking at. I chose four very strong stocks. I chose four very good dividend stocks. I chose them for the fact that they have good growth upside potential. They have good potential just in general. So in my eyes, I see that as like three different ways that each of these stocks are going to make their money back, and as well as make you money back. But that's why you've been seeing me call those four out. And if you didn't know and you're new here, I'm glad you're here. These are the four that I was looking at. Appreciate you guys looking at that. What's another one? It's another like couple stocks I can do. I actually don't mind ending it here, but I wanted to add a few more to this for like long-term picture. Let's go look at some S&P stuff. So Facebook. Let's look at Facebook. Ooh, solid line there. We'll mark both the wick because we are on the weekly, so every spot is more resilient or more crucial, more important, I should say. So if I'm marking a wick on the 1 minute, that actually doesn't matter. Like me marking that holds no weight. Me marking a wick on the weekly matters. Because that's where true price did go. These are weak. This is a whole week right here. This isn't just, a little bit of information. This is a lot in one candle. In each of these candles. That's a lot of information in each one of these candles. You need to see it like that. Information. When that stockbroker was teaching me how to chart and he was first giving me like a good pickup on things, he would always, the first thing he had me go do was price history. He had me go through like 5 stocks that I liked or just whatever list I had at the time. He'd tell me to go through every long-term time frame, and he had me go through, you saw me go from the 20 and the weekly, the daily, the 4-hour, 1 hour, just going down the list, just going down the time frames. That's how he would have me do it. And I'd be going from left to right. I'd be looking at price history. I'd go look, like, was it an earnings report that made it shoot up? Like, damn, look, they had an amazing earnings. Bam, it shot up. That's crazy. All right, that's awesome. That's a good way of seeing a stock explode. Or if I didn't see anything on, let's say, this red candle, like, let's say this wasn't here. There wasn't earnings. I'd go look at this date. I can see there at the top left, this date right here. You can see top left that on 7/23/2018, I could go look for some news articles. I could go look for whatever fundamental analysis news. Was there anything in the economy going on? Just look at that date and go find what happened. What made this candle appear here. Yes, it's probably earnings that did it to this one. Yeah, estimated was 1.83 and it was 1.74 actual. So they had a bad earnings. I'm sure there was some guidance issues or some sort of just something that made it come down. But that wasn't the point. It was just go, research what made that happen. Even if it's something that happened 10 years ago, it's still good to go look at because it gives you that extra knowledge of what can make what happen. There's so many variables that can make other variables change. And that's pretty much all this is. Like, it's just variable on variable on variable. So let's go check out a few more. Home Depot, I like Home Depot. Very strong bounce, as you can see. 6 green weeks in a row after they caught support on here on the 200 SMA. And by the way, these SMAs are these are really two of the most used and important average lines. The 50 and the 200. Some people use EMAs, some people use SMAs. They're almost the same thing. Damn, Home Depot is still looking strong. It might not be as strong as this candle was, but it did pull its dress up a little more, so I don't know. Let's see. Let's delete all these lines. Let's get a price level. I like that was a spot, just like I had on the old ones you saw me delete. Just because of those points of interest there. This rise is kind of like insane, but anything's pretty possible in the Trump 2020 market. The Trump COVID 2020 market. That's going to be a future line that needs to be broken just because that was the all-time high where it sat on support before it made that big move. That was a really big pattern there. If you guys want some homework, you can look up what is this pattern. This blue candle, this reversal candle. and then this big red candle. Look up what is this pattern here? You could send it to me. I was just about to say it, but I wanted to stop myself because it'd be kind of cool to give out some homework. But it's just optional homework. If you referred to this video, you can check out, what is this pattern, and I'll leave an answer at, I guess, Monday after market closes for the guys in premium access chat. Just give you all a little fun little homework to do. Because it is that's a very awesome pattern to see. It's even more cool to see it hit a support and then this happen and then it fail on that line. That's really cool. The nerd in me just popped out, but the fact that the wick came up and rejected that, it kind of like trapped itself and then made that fat gap down. Now, yes, this was the market's fault. It wasn't Home Depot's fault, or the COVID response, but that was a bunch of cool little patterns there here on the weekly. Walmart, they've been out of that squeeze. They're kind of just doing that continuating I've been talking about, where they're just stuck in a range. It looks like it's trying to poke its head out. We get a rejection here on Walmart. Another notable line is that gap. And I didn't even notice, but it hits this wick too. So that's kind of cool. And we're on the daily, so that wick is kind of important. That isn't the most important line in the chart, but that is a very crucial line just because it does happen to line up at the top side of that gap down. It is above the bottom side of the gap down now, though. It's peeking its head up as momentum's picking up, but our ATR is kind of dropping off. Which long term, that isn't as crucial. I mainly use that for more day trading. See, like, oh, I know all the juice is up. I know that a lot of the continuating is going to happen when it's dropping. Power hour. It's more of a smaller time frame for me. I think I'm going to wrap this up. I really do appreciate you guys clicking on this. I really like doing these for you guys. I'll make a small economic note for you guys of all the economic reports coming out this week and all that good stuff. But thank you guys, and make sure to... Oh, I guess you don't have to drop a comment. This will be unlisted. But thank you guys.